The million dollar baby concept is an index universal life insurance policy on a child. I've been getting a lot of requests to learn more about it, so I thought it's about time to make a video on the topic. This strategy is almost identical to the 529 plan. So, would you rather be invested in the red line or the green line? The red line is the market strategy or your 401k, IRA, or 529 plan. And the green line is the index universal life strategy. With an IUL, you choose an index like the S&P 500, and your money's not invested in the index. It's not in the stock market, but you get the return based off of the movement of the index. So your child's money grows however the index performs up to a limit or a cap, for example, 11 points. Now, if the market grows 15 points, you will only grow up to that 11% cap, but the trade-off is the complete downside protection from market losses. So just like you would have a cap, you also have a floor. So the zero is the worst thing that can happen is you get zero interest in market downturns. In other words, your child would never lose any money ever. Indexing also gives you the ability to grow your money at a decent rate, historically 7 or 8% annually, and be protected from market downturns. So let's take a look at this chart again. You can see how volatile the market was between 1998 and 2013. And you can see when the market goes down, you get zero growth because of the floor, you lose nothing. And then you can also see that if you had your child's savings in an index product, they would have lost nothing in the last recession and would have been ahead versus a 529 plan. Because this is a life insurance policy, your child would also have access to the death benefit, tax-free while alive in the event, God forbid, something should happen to them, like a critical or chronic or terminal illness, as long as the policy is enforced. Now, keep in mind, universal life insurance is permanent life insurance. So your child can keep this for the rest of his or her life or to save for their own retirement someday instead of or in addition to a 401k or an IRA. And their IUL retirement income would be tax-free. One of the powerful concepts behind an IUL is the ability to access your cash by taking participating loans from your cash value to finance your child's education or their first car or a wedding, whatever they want, because they're actually borrowing from the insurance company and using the cash value as collateral. So even though your child takes out a loan, that money is still in their account, earning uninterrupted compound interest. So let's say your child has $100,000 in cash value in their policy, and they decide to take out a $20,000 loan to pay for their tuition. Let's say the insurance company in this example charges them 5% on the loan, and the market went up 10%. That loan didn't even cost your child anything. He or she actually made 5% on the money they loaned themselves. An IUL contract can be used for educational purposes or anything you'd like. You get market-like returns with no risk to stock market downturns. And your child's money grows tax-deferred and withdrawals are tax-free as long as they take out participating loans. There are no annual contribution limits, no age restrictions, and your child will get the death benefit and living benefits. And life insurance is based on risk. The chance of a young child dying is very low. Thus, the cost of insurance is extremely low for children, and the fees are minimal. Good to note also, there's no financial aid calculations like a 529 plan has, so it won't hurt financial aid if they have a product like this. Let's say you want to set up an IUL policy for your newborn child. You immediately start contributing $200 a month into the plan. Your child will immediately be covered by over $100,000 of permanent life insurance coverage with living benefits. And then at age 3, your child will have accumulated over $10,000. By age 25, over $100,000. And if your child does not access this money, their IUL is projected to hit $1.7 million in cash value by the age of 65. And that's with only $200 a month into the plan for 20 years. That's your million dollar baby concept. It could even turn on a tax-free income stream of $80,000 per year to last them the rest of their lives, no matter how long they live. An IUL is the most flexible saving vehicle for children on the market, and it is the best time to start saving as soon as possible. If you want me to structure an IUL policy for your child, please click the link below and complete the application form. And if this gave you any value, please give it a thumbs up and subscribe for more Index Universal Life tips from me.